Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And today we're going to be giving you guys some insights and takeaways that we had from attending the 2024 Think Tank, and it was hosted here in Las Vegas.
That was nice.
It was nice. They came to town finally. Thanks, David.
Yeah.
But to give you guys an idea, the Think Tank is actually a part of the Nelson Nash Institute. And the Nelson Nash Institute is exactly what it sounds like. Nelson Nash is the author of Becoming Your Own Banker. And over the last several years, David Stearns, his son-in-law, has organized this, created this organization that is really out there to spread Nelson's message and take it to everybody. And not only spread the message, but also hold some people to some ethical and moral standards, I would say, so that they're out there giving the correct advice. And so he's been out there heading this up for many years now. And so that's the NNI. And every year they hold a think tank. Anthony, tell them.
Yeah. And then that think tank is in only people that are practitioners or invited guests from practitioners. And guests can typically only come once. And then it's only open to people who are practitioners. And it's an event. It's typically a 2 to 3 day event. It was typically held in Birmingham, Alabama, which is where Nelson lived, which was great because Nelson and Mary would attend every year. But now this year, they've decided to try some different locations, and Vegas was one of them. And it's a great opportunity for like-minded individuals to get together, to share ideas. And we have some panels and some speakers. And it's a way to re-engage and really nerd out on IBC, right?
Speaking of nerds, we've got a 2-time speaker here with us today, right? Not myself by any means, but Anthony, you've spoken at think tanks twice over the years, right?
Yeah, it's been a huge honor.
Yeah, and I'm proud of you, man.
Oh, thanks.
Yeah, very cool to see you up there and speaking and spreading the message. And so I thought I'd throw that in there. But today it's not about Anthony. Today, I know it's about you guys. So we're going to share some of our takeaways with you. Anthony and I have come up with our own 3 takeaways. And so because I'm emceeing this, Anthony, you're going to go first.
Okay, I like how we do this, where we come up with the 3, our 3 takeaways and ideas, and then there's always, some competitive on whose are more advantageous.
Yeah,
but
more relative.
This one might be a little different. Now, this one, I'm going to tell you what my takeaways are, because this is like a little different. And so what I'm going to talk about is really three pieces. One is they had some executives from mutual life insurance companies. So they had a panel. So that was very interesting. So I'm going to share about that.
Okay.
And then one guy, Jason Lowe, had shared how he does these annual family meetings to talk about infinite banking. And then the third thing I'm going to talk about is kind of some smaller takeaways, that little bits of information that I wanted to share.
Okay.
So you're emceeing it, but I'm doing a little different.
Man, you threw me a curveball there.
Yeah.
All right.
Yeah.
Well, I'll tell you what. Do you want to dive into one of those right now?
Yeah.
Okay. All right. Yeah. Tee it off, man.
Yeah. So the first one, which I thought was very interesting, was the panel of
that was a good panel
of the life insurance executives. And one of the great questions they'd ask is, what are you concerned about? Which I thought was very interesting. And they went around to all of them. They all had a couple different answers. One was like compliance.
Yeah.
Is the government is going to get either deeper involved, not just in their aspect, but there's some aspects where they're trying to get in the agent's perspective on kind of what and how we do. So there's some concern there. Every now and then they talk about taxing of life insurance. But here's the thing that always helps me, because when I hear that, I'm like, oh man, that's kind of like a big part of my plan. But first thing to remember, we're not doing this. This isn't a tax plan. We're not doing this solely because of the taxes. The main reason is we're never breaking the compound interest curve. Now, not paying tax on that curve is going to help that curve go higher, right? But even if there is a tax, we are still moving ahead, and it's still going to be better than breaking the compound interest curve. That being said, I don't want to have to pay any more taxes.
Yeah.
In fact, one thing I did yesterday, I had to file an extension for my corporations, and I'm like, well, let me just kind of see where I'm at. And I'm like, oh man, I even owe some more money. So I wanted to be able to have my money as protected from the IRS as possible. But here's a couple things, Cameron. Who are some of the biggest owners of cash value life insurance?
Banks,
Banks, corporations,
politicians.
politicians, and the wealthy.
Mm-hmm.
So those, they don't want to. If you and me don't want to pay taxes, imagine what these guys, what these millionaires and billionaires are thinking, and they can afford the lobbyists. And so I don't think that's going away. And also, Cameron, as you'd mentioned, politicians.
Yeah.
Like a couple of years ago, we had actually pulled the financial statement from, at the time, Vice President Biden. And you know what he had listed on there? He had some whole life policies with a mutual company. And you know what they also had on there? They had loans on there, right? So our, not just our politicians, but our president is practicing infinite banking. So I don't see that that going away. Um, Another thing they talked about is cybersecurity.
Yeah.
Now, and which, as if you probably noticed, Cameron, and really, we need to let everybody know is that there's been they've been very concerned to make sure when people process a loan that it's actually the policy owner, because before there was like a loan form, right? And we'd mail in a copy of a check, but now a lot of times we can do it. You can do it over the phone or doing it online. So they're trying to protect us. One thing they're doing is when some of our clients are having loans, they're actually calling us and saying, hey, does, Mr. Client, can you make sure did if he's getting this loan, which for one is a little burden because it's adding a delay. I don't mind so much for us, but I mean, just letting you guys know that is maybe adding a couple days delay on the processing, but we have to realize it's for the greater good to make sure that that money is going where it's supposed to go. And I have a lot more.
Wow. Wow.
So
Still
why,
going.
why don't I
Yeah.
transition,
Yeah.
Cameron? What else
Man.
did you have a takeaway?
Oh, I did. I had
You
three,
just
and
want me to finish
I,
it?
I had three. And I'm going to share them by bullet point 1, 2, and 3
Okay.
instead of all at once, like some
I got
people chose to do. But that's okay, right? So, the first point that I was going to share with you guys is Anthony mentioned going back to Birmingham, Alabama, and I think the first think tank I went to was, I was trying to remember the year, 2011, maybe. You were there,
of
right?
course.
2011. We went back to Birmingham, Alabama, and we are in a small conference room with maybe 4 tables, and there couldn't have been more than 5 guys at each table.
There's more than 4.
4 tables?
Yeah.
No, there wasn't.
Well, I don't.
There was. It was pretty. It was in an offshoot of that library,
Okay. All
and
right.
yeah, I could have swore. I'm very confident in this that
Mhm.
there was very few tables. Let's say 5, but there couldn't have been more than 5 or 6 guys at each table, right? Because you only take up half the table, speakers
Mhm.
at the front of the room, right? So you call that maybe 30 people,
Mhm.
right? And I walked into the conference room at Green Valley Ranch last week, and there was almost 300 people. There was 287 people that were there attending, and I was very impressed by the attendance. Filled up an entire ballroom, and it was amazing. Um,
Yeah.
One of the things, right, that stuck out to me was early on in the presentation, they asked people to stand up, and they asked if you've been involved in this in 1 year, sit down, in 2 years, or I think they actually went down.
Mhm.
But at one point, they asked the question for someone that's been in this business less than 2 years to stand up, and it was probably 60% of the room,
Mhm.
right, that was still standing. And so here you've got 300 people that are there. 60% of them have been in this business for less than 2 years. That was great to see, but also
Mhm.
concern, right? And that also follows up maybe my second point. So I won't share it with you now, but I was really happy to see what Nelson Nash Institute has been doing. David Stearns and crew have been out there promoting this organization and this message, and man, it's catching fire. There's a lot of people that are really excited about infinite banking. So awesome. That's my first point.
Okay, that was quick.
Yeah,
All
that
right.
was quick. Anthony, you got point number two
Yes.
or three or eight, whatever you're at?
Well, point number two, I'm going to talk about one of our friends, Jason Lowe out of Canada, he had he's spoken many times, and he had shared how he conveys. They have an annual family banking meeting, and so they even had some videos of it, and they had
Yeah,
shared some clips where they're talking to these and they even had some of his nephew up there on stage who
that was
was
cool.
maybe 12,
Mm,
13.
yeah.
I mean, can you imagine being on stage 12, 13, speaking to a room of 300 adults? I mean, so that that was impressive, but it re-engaged me and encouraged me that we need to convey what it is that we are doing to our or and with our children, and taking a little time doesn't need to be a lot, but take them and teach them a little bit of some financial literacy. And what that did inspired me is when we take our family vacation here soon, I'll throw up what a balance sheet, what an
Good
income
for you.
statement is,
Good for you,
right?
man.
And
Yeah.
your passive income number. And then I want to talk through it. Like, okay, if you buy something, how does it affect these financial statements, right? And the main one is we want our passive income number to grow, and we want our net worth to grow, our balance sheet to grow, right? So, like for an example, I'm going to use um, I tell you, for me, I've been intrigued with designer handbags. And what I'm intrigued by is what people are willing to pay for it.
Mm.
I mean, we were out of town a couple of years ago, and we were in California, and there was a store. I was trying to remember what it was called, but it's a secondhand store. And I'm sure you know what it is, Cameron, but all it sells is designer handbags, right? And we walked in there's a used handbag for 25 grand.
Mm.
I mean, which is an appropriate down payment on a rental property with a turnkey provider. And so what I was going to do was, all right, if we get that handbag, where does it affect? Right, it lowers our balance sheet, right, and it's increasing our expenses. It's not affecting our monthly income number. Or what if you take that 25 grand and you bought a rental property? Well, all right, that'll lower the cash, but it increases our asset and increases liability and increases our passive income number. So my kids are a little older, and some of them probably already understand. But when our kids are younger, we have this opportunity that to be able to teach them. It doesn't need to be a big, long, um, elaborate lesson. Just a little bit here and there.
Nice.
That was my second point.
I have no idea how you got to handbags from that. That was good, man.
I don't know, but it still intrigues me how much people will pay. And the thing is, the people that are paying for these are people who can't afford it. I mean, that to me is what the most intriguing thing is.
Wow, that came
You
out
know?
very judgy, but
Yeah.
we're gonna move on
Yeah.
from that. All right, my second point. Thanks for asking. Is the takeaway that I had is they opened up with this, and I was really glad that they did. Is what they talked about is they talked a lot about protecting the brand at
Mm,
this think tank, and really what they're talking about is that as a licensed practitioner, is you're able to go out there and you're able to say infinite banking concept, becoming your own banker. Those are registered and trademarked by Nelson Nash Institute, and so as you get appointed by them and you go through kind of this ethical attestation saying, hey, I promise, I won't be soliciting inappropriately or using wrong products like that. You can then use those trademarks. And so We've talked about this many times over the years on our podcast. And so I was really excited to see that they were out there and they are going to actively be going out there and sending out cease and desist letters to individuals that are using the wrong terminology. And funny enough, Anthony, did you notice that the individuals that were using the wrong terminology, none of them were there?
Mm.
None of them were at the think tank.
Hmm.
So I found that very curious, very interesting. But when I say inappropriately, some of the things that they had kind of red flagged, and they said some of the wording that they're concerned about. One is phrases such as recapturing interest. That came directly from the panel of mutual insurance
Hmm.
companies executives that said, hey, this is a concern when we hear people saying this. The second one was when people say, I'm going to be earning 50% on my money. I've often heard that stated, and what they're referring to is on an illustration. If you get down on the
Oh.
illustration, and let's say your premium is 10 grand, and your cash value increases to 15,000, the way that that's being conveyed is you're earning 50% on your money, right? And they're going to start cracking down on that, just some of the wording, which I think is great. The other point that they made was this idea of working a system of policies, which is what we call laddering, right?
Mm.
And so building a policy, leveraging against it just to go buy more and more policies. We've talked about that. We're very firm. We're not fans of that. And so there's individuals and agencies out there that are promoting that. And so I'm excited to kind of let these people know that, hey, you know what? There is kind of this governing body that's going to go out there and be protecting the brand. So I was excited to hear that. Anthony.
Okay, I'm gonna talk more a little bit about what the life insurance panel, because
Okay. Yeah,
there was so many good pieces in
that
there,
was a good panel.
and one thing they had asked is, what are your thoughts on policy loans,
Mm,
right? Because you talk to an agent, or this is how we convey it. Insurance companies love life insurance policy loans because it's fully collateralized, so they're not going to lose the money.
yeah.
And compared to that, they're earning a very good rate of return for the minimal risk that they have. But and I tell everybody, you got to if somebody you got to take with a grain of salt. If somebody's kind of selling you a product or something on
Yeah.
what they're saying, like you kind of need to just be careful because they may have they may have a different agenda. But so here we had that opportunity because what's interesting, I've been telling people that, and now
Yeah.
I'm like, well, I hope I'm telling the truth, right? And one of the life insurance gentlemen in there had shared that they are big fans of it, just because of what I'd said. So that was just good for that to get reinforced. And they also asked them, what are your thoughts on getting large amounts of paid up additions?
Mm,
Because we have to look at it from the insurance company's point of view. If we put in a large paid up addition, that majority, almost all that's going to cash value. So when we're in a low interest rate environment and the insurance company has the guarantees, that puts a lot of pressure on them to be able to put that money to work. So in a low interest rate environment, they were sometimes apprehensive to take on large amounts of PUAs. But now that interest rates have increased, they're a lot more open to it and are looking forward to getting that capital. And then they asked them about the impact that COVID had, which I thought was interesting. And one thing he had said is that there was no forward impact, meaning that they don't think that this is going to be a continual problem, that issue had passed. One of the panelists had responded that they were able to pay for that from the income statement, not the balance sheet, which again I thought was interesting. But
mm,
again, I'm a nerd. But what he's talking about, what he meant, they were kind of able to pay it out of cash flow. Like they didn't have to go incur debt or sell an asset to pay it. They were able to do it out of cash flow. And they had asked them if they had seen a big difference in some of the mortality rates. And one thing he said was interesting. They found an increase in mortality for men 20 to 30 in car accidents, and they were relating it to marijuana being legal and more people driving under the influence. Cam, do you have
Yeah,
a third one?
I was going to add to that is great points there. That panel was really good. And as you were talking, I was looking through some of the notes that I wrote down here. And in regards to policy loans, one of the quotes that I wrote down, I said that it's not problematic at a corporate level, only at a policy contract level, meaning the individual. Right. So their concern was more with an individual taking max loans on a policies and them losing the ability to maintain that contract.
Mm-hmm.
But on a corporate level, they had no concerns. Non-issue is really what they wrote or what they said. So great point. I'm glad you shared that. And I got 2 points here that I'm going to add into kind of my third one. One of them you mentioned, and you mentioned Jason Lowe. Really, the 2 points that I'm going to add together is really kind of a perspective at like a micro level and then a macro level. Jason Lowe did a really good job of looking at infinite banking and implementing that on a personal or a family level, which you already mentioned. So I won't spend too much time there. But man, I was really impressed with the way that he's been able to not only communicate it to his kids and his nephew, but man, those guys are on fire. It's one thing to be sharing this message with your kids, but it's another thing to have them be excited about it, and not only excited about it, implementing it. And I think that is just credit to Jason.
Mm-hmm.
That guy's got an energy and a passion about infinite banking, which is I think unmatched. Right? He sits on the board of directors for a reason. So
Mm-hmm.
kudos to him. The other piece to that I saw was actually Kyle Fuller. First
Yeah.
time really, I know Kyle, know of Kyle. I don't know Kyle, but I went up and shook his hand afterwards, told him great presentation. And the reason I shook his hand is because, man, he went up there and he laid out a plan for practitioners to be able to take this message to the 10%,
Mm-hmm.
right, to the population. And he has an opportunity with Keller Williams to come in there and educate really their realtor base across the country. And so, great opportunity. But man, I really enjoyed his message and just kind of challenging us practitioners to think a little bit bigger in the ways in which we can take this to other people. So, two perspectives that I saw: one, implementation on a kind of family level, and then just taking it bigger and broader to a much higher group. So, great. Well done. Anthony, what else you got?
Well, I just wanted to make kind of a few comments that how important it is that we sharpen the saw, that whatever industry we're in, that it's important that we're taking some time to learn our craft, but also to network with some other people in our space. One of the many things I like about the think tank, most people there have an abundant mindset. I mean, some of the things that they had shared, even like the PowerPoint that Kyle Fuller had shared, that was some pretty good stuff, man. That I could see him might wanted to keep that close to the cuff, but instead he shared that to the community. And to me, what I found is where I benefit most from these events, unfortunately, are not when I'm sitting down in the meetings. It's kind of in the halls and networking and in the bars and at dinner afterwards. So I encourage you, if there's some sort of event in your industry or maybe an industry you're trying to get into, go to a conference, but go through it. Meaning like go through the hallways and take advantage of all the time and networking that they have to offer.
Awesome. My parting thoughts here. One, I just kind of shared about Kyle, but also Carlos Lara spoke,
Yeah,
and
he's always good.
he is good. And again, man, he was kind of painting the vision of kind of infinite banking, but also kind of the current monetary system that we're in. Sometimes I get lost in the weeds there on a lot of that. But really, my takeaway, one of the things I wrote down was he said, "We're born into a broken system and it's only gotten worse." And then he finished up his presentation by saying, "Our financial system's broken. The government has never fixed anything. It's up to us to fix it." Man, I love that, right? Kind of
Mhm.
bookends there. And man, I felt very convicted after attending that. I loved being able to attend this think tank and get refocused and just get excited about taking this message to, one more household, one more investor at a time. So, again, appreciate you guys listening to this episode.
One thing I want to say about Carlos, not only is he on the board
Hmm.
of the NNI, and not only has he written a couple books with Nelson, he has a new book called The Perfect Investment. So that's something that I bought, but I haven't read yet.
Mm,
But I'm sure that has be some great infinite banking content.
awesome. Thanks. Hope you guys enjoyed this episode.
Go make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.